It takes a brave soul to step onto the battlefield of entrepreneurship. Today, we're speaking with Sean O'Dowd from Scholastic Capital, and we will be discussing his entrepreneurial journey. Sean, welcome to the show.
Thanks for having me.
Scholastic Capital, very exciting concept. Tell us all about it.
Yeah, so at its core, we are a real estate fund. We buy homes in really high-end school districts, hence the name of Scholastic Capital. And then rent those homes out to tenants, most commonly families that want to be there for the school district.
So, you're new into the realm of entrepreneurship, but you're not new in the realm of business. You have an illustrious background with BCG, well educated. How did your background play into this concept and notion that you knew you two things wanted to jump ship, and then two knew specifically that you wanted to do Scholastic Capital?
Yeah, I think it was a combination of a couple different things. The first one was my learned lived experience. So my mom was a teacher growing up, and I moved 22 times before I went to college. So moving so much, and with my mom being a teacher, I was kind of really attuned to the school district thing while I was growing up. And it kind of dawned on me 10, 11, 12, 13, 14 years old, like, hey, I'm on my 12th school district at this point, and basically everywhere we've lived, there's been a really good school district in the area, and everybody knows it. Everybody talks about it. People are trying to live there. Like this is kind of an interesting universal human thing of like location, 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 real estate. Like a location that really matters if you've got kids, a school district. So that was the kind of the kernel idea of the idea. And then to your point, like super fortunate. I went to Wharton, got to work at BCG, like learned a lot about how to actually validate an investment idea from a data perspective, how to build out a thesis, how to backtest a thesis, and how to put together a fund. So you kind of took all those pieces together, and it took that learned experience plus the education to kind of come up to what is now Scholastic.
And correct me if I'm wrong, but you also put your own money where your mouth is, and you actually went and did the heavy lifting of buying some homes, and that gave you some data. So talk to us a little bit about that.
For sure. So I had a lot of conviction in the thesis to the point that I was willing to put a lot of money on the table, but I didn't want to ask investors to invest alongside until we had actually done it ourselves. So my wife and I put a ton of our own money on the table. We bought a bunch of homes with our own capital for a couple of years, so I could test the thesis, see how it worked. I did every prospective tour with every tenant, talking to them, understanding why they were living in there, why they were looking to move, why they wanted to rent, to really build out a strong understanding of who are actually our tenants and why they wanted to rent, what our maintenance looks like. And that got to the point where it built up enough confidence in what we had of this doesn't just actually work in a spreadsheet, it actually works in real life. It's time to turn this into a true fund and go raise capital now.
Do you think because you had that experience, it tipped the scales with your investor conversations, your investor meetings?
I think so. Because for example, like we got a really common question we get from investors is like, why are tenants renting? Like our average tenant makes $210,000 a year. Like why does somebody who make 210 rent when they theoretically could be buying? And if an investor had asked me that and I hadn't done it, I could have been like, well, like I don't know. It's a great question. The fact that we had did that, I had done it, and we were getting questions from investors. I could say, well, we see like 4 or 5 main profiles of tenants. Profile number one is about 50% of applications. Profile number two is 20. Profile number three is 10%. And none of these profiles want to buy. And here's the reason why for each specific profile. And then investors are like, oh, like that all makes sense. I get it why people aren't buying in this case.
Right. And you're kind of going way past assumption stage and saying, I have actual data, I've physically done it, put my money where my mouth is, and the real deal, you can, trust me, you're increasing your level of trust and confidence with your investors and the marketplace. That's awesome. So let's talk a little bit about the type of support system, because part of this show is the courage it takes to make the leap, going from a BCG, comfortable, cushy role to making that leap, and what kind of ecosystem, support system, and even just mental bandwidth and mindset you need to be to make that shift.
Yeah, the support system is huge to that. I mean, the big one is my then girlfriend, now wife, um, and we've got a really awesome group of advisors here in Scholastic as well, and they all kind of spike in different things, which is great because when this kind of problem exists, I can call this guy. If this problem exists, I can call that advisor, and so it makes it extremely helpful. But it's hard. Like there are challenges and problems every day. There's things that don't expect to be dealing with, that you need to deal with on a day-to-day basis. Like uh, the way I think about it is like it's my first time driving the bus, but it doesn't mean every other seat on the bus can't be extremely experienced and like able to come up and grab the wheel when we need help with it.
So for any future entrepreneur out there, what would you caution them before they jump ship?
I would I would caution them that it's going to be 10 times harder than you think it's going to be. And with that in mind, go in as much as you can to make it easier on yourself, on your investors, on your customers. Like for me, like it's been hard, and I made it easier on ourselves by having done it for a couple years with our own capital. Like I can't imagine what it would have been like if we'd done it without doing the investing for our first few years. Like make it easier on yourself by like having a really good board of advisors who can help you out with making sure you have a good support system because it is hard. And you kind of need that support and structure around you.
Who do you need to be as an entrepreneur to win, to succeed?
It's a good question. Um, I the first word that came to mind actually was fast. Um, it's been fun. Like I've gotten to meet a lot of really awesome entrepreneurs kind of across the gamut. And one thing that I've noticed about a lot of them is they're very fast. Like if they say they're going to get something done, like they get it done very quickly. They tend to be very fast at email responses. They tend to be very fast at decision making. Going, yep, okay, let's do it. Let me get it done. Like they fast is just a really good like one line word or one word way to describe them.
Uh, What's your philosophy on de-risking? Like, how do you approach risk as an entrepreneur?
Risk is a big one, especially because I'm in an asset class of real estate where people go bust all the time. You can like everybody knows somebody who went completely belly up in 2008, 2009. So think about it a lot. I think the big way that I think about it is, and this is going to sound cheesy, but like it's basically asymmetric bets throughout the line of like you want to absolutely minimize downside scenario and keep upside open. And if you keep doing that for a long enough time, it's eventually going to work. So like on our side, for example, like uh, most bankruptcies and real estate funds have been when there is a short-term debt that just happens to expire at a bad time. It's like if you had a 10-year loan that expired in 2008, like you went bankrupt. Doesn't matter how good you were, like that's just what happened. You went bankrupt. If you had a loan that expired during the first few months of COVID, you went bankrupt. If you have a floating rate loan that's going to be resetting next year, like you are most likely going to be in a world of hurt because rates are going to be a lot higher than what it was when you locked it 5 years ago. So for me, like I use 30-year fixed rate debt. I don't use 5-year debt. I don't use 10-year debt. You know, it's slightly cheaper. I use the more expensive debt because it gives us optionality over a 30-year period. So it's like those infusing those kinds of decision makings of I'm sacrificing a little bit of upside in the near term, but I am protecting the long term downside.
Yeah, you're buying yourself time, and that critical time you can use to make other decisions and other bets. And yeah, that's really smart. When you think back to jumping ship and just kind of the entrepreneurial journey you've had in this short period of time, what's one pinnacle that you can look back, like one big highlight or one big win, something that kind of keeps the wind underneath the sails?
It's a good question. There's been kind of a couple cool ones. Like we got some really awesome press coverage that we weren't expecting. Um, the I think the first big one though was like the most exciting one was the day we bought the first home under the fund. Because that was the moment. It's like, okay, we've been doing this for a couple years. Like I've bought a bunch of homes at this point, but this is the first time we've bought a home with investors' money that believed in the thesis, believed in what we're doing, and wanted to join us. That was a fun moment. And um, this is going to sound ridiculous, but I'm a big sports fan. I'm a big NFL draft fan, and there's a famous quote about from Peyton Manning about how like a lot of people view the NFL draft, all the rookies getting drafted in the NFL view it as their like big celebration, like they finally made it. And Peyton Manning's like, no, like don't think about it that way. It's like it's day one, and you're lucky enough to get to day one, but nothing else. Like you have a lot to do now. I it was a fun moment, but it was also like a day one moment of like, okay, like it's real, but doesn't mean anything at this point. Like now we got to execute.
That's the mindset. Yeah, that's so great. All right, I'm gonna throw a word at you. I want to know what's the first word that comes to mind. Real estate,
Slow,
entrepreneurship,
fast,
Scholastic Capital.
stable.
If we meet again in 5 years, what statement would you like to be true?
Um, if we meet in 5 years and we could say that we were the best fund, the most stable fund that our investors have invested in, and that Scholastic is the best place to work for our employees, then if those two things are true, then everything else fell into place and everything else is in a really good spot. Um, and like could almost guarantee that we've hit pro forma numbers or exceeded pro forma numbers if those two statements are true.
If you were to give one piece of advice to your younger self, what would it be before you started Scholastic Capital?
I would be to expect it to be harder than you would have expected going in, and to take steps to make it easier and de-risk for yourself, for your investors, for your customers. Like for us, like I bought homes and I had money for the first few years. Like that that was a de-risking step that I'm really glad I'm done. I did, and like Scholastic is hard now, but it would have been impossibly hard if we hadn't taken that step first. So taking those steps to de-risk in the beginning, I think is critical.
Yeah, that's brilliant. How do people get a hold of you? And are you currently actively taking investments?
We are. So we are actively taking on capital. At this point, we're a rolling fund, so we can actually bring on capital at any point. And to get a hold, we're at scholasticcapital.com. And then we also write a newsletter, email update type thing every month. We send one out to our investors, and we send out like a slightly edited and redacted one publicly as well after the investors get it. So if you wanted to follow along with our story, it's actually very easy to do so.
Last question. What's the number one reason to invest into Scholastic Capital?
We are a high floor fund, like and we're basically trying to build ourselves as like the AT&T stock of real estate funds, like steady Eddie, solid distributions or dividends, if you want to use the stock language. We're not going to double your money in 3 years, but we're also not going to lose your money in 3 years. At least we don't think so.
Very cool. Well, I'll link everything down here in the show notes. You were more than gracious with your time. And like, comment, subscribe. We'll see you on the next one.
Thanks for having me.